Hello guys, this is Vineet from Edge Forex, and today we are going to decipher or unpack what Jerome Powell came out and said yesterday in Jackson Hole. So, in my opinion, if you were with me on the live coverage yesterday, I was very clear as to it is the biggest policy mistake they have ever made. Okay, so let's step back for a moment and talk about what is Fed's mandate. What are they supposed to do? They have only two things that they want to control. One is they want to keep steady employment levels. Other is steady inflation, which is around 2%. Okay, right now the unemployment is very low. Yes, the job growth is slowing. We'll cover that in a bit later. But the prices or inflation is consistently above 2% for a very long time. But they are in a rate cutting cycle. Rate cutting cycle meaning making money cheap. Making money cheap meaning fueling the inflation bubble. So now if they are trying to control inflation and bring it down to 2%, they're clearly failing. Even though the jobs and the employment are doing good, at least so far. We're not in a recession officially yet. Job numbers are slowing, but unemployment rate is steady. Again, we're going to decipher everything as to what he came out and said, in my opinion, was a huge policy mistake. They should have actually raised rates, not dropped. Okay, so now they have, as I said, they have only two things that they need to take care of: interest rates, inflation and jobs. So now, based on what he said, that's saying that they have ripped up the Fed's old playbook. Everything is being redefined. Now, 3% is a new 2%. And jobs, what jobs? Employment, what employment? But the next rate cut is going to define what's going to happen in the entire next 10 years. Because things are going to get so ugly, guys. And I'm going to try to show you guys now as to why I think we are on a cusp of something big that is going to happen in the next weeks and months to come that will be out of control, and the Fed nor Trump are going to be able to control that. Okay, guys, so let's see what we have next. So now, Powell, he started off with saying that, hey, the labor market remains near maximum employment. Here is the absolute. He's going to talk from both sides of his mouth. He's going to contradict himself, and then he's going to pretend everything is okay. Okay, let's see. Okay, he says the labor markets remain near maximum employment, and inflation, though still somewhat elevated, has come down a great deal from its post-pandemic highs, but he warned the balance of risks appears to be shifting. That means he's expecting inflation to go higher. If you are believing or thinking that inflation is going higher, why in the hell you are proposing a rate cut? I just don't get it. You are admitting that inflation is going to get higher because of tariffs. We'll cover that. Okay, so he is talking from both sides of his mouth. He's on one hand saying inflation is going to get higher, but he's saying he's open for rate cuts. On jobs, he's saying job payroll growth slowed to an average of 35,000 per month, down from 168,000 per month during 2024. Yes, jobs have slowed down, but unemployment is still historically low. But again, if that speed goes up, then yes, you should think about cutting rates. But on the other hand, you have the inflation dragon that is going to throw a spanner in the works. You need to decide what's more important. And I'm asking you guys also, guys, to think about this. A few 100,000 people losing their jobs, or the entire population, or the entire globe paying higher for everything that they do, that they own, that they buy. Like, how does that make any sense? It just does not. I for one, am totally flabbergasted and confused as to what's going on in Trump's and Fed's mind. Okay, so now on one hand they're saying that, hey, there are two things that are happening, and that's the other contradiction that they have. They have this right now, the labor demand, that is the companies that are hiring and the labor supply, that are workers that are available, are slowing both at the same time. Hello, wake up and smell the coffee. You are deporting hundreds of thousands of labor workers at a record pace, and on the other hand, inflation is getting higher. Demand is getting slower on the goods and services, so companies are hiring less and less people. So that's your contraction on both demand and supply of labor. But he's saying, oh, it's a curious kind of balance. Come on, guys, you are supposed to be the one who has all the data in front of you. So why do you have to come out and say these kind of words only to confuse the entire world? I'm flabbergasted. It doesn't make any sense whatsoever. Okay, guys, and then he comes out and says, the unusual situation suggests that the downside risks of employment are rising. Okay, fine. So he can see a little bit in the future that hey, if this trend continues, it more than likely you'll have more unemployed people. Yes, but to save those few 100,000 jobs, you have put the entire globe as a hostage. You've taken the entire globe as a hostage in higher prices. Now, how does that make sense? I don't know, and I do not understand. Okay, the GDP tells the same story. Okay, what is GDP? It's the total value of goods and services produced by an economy in a given year. So it slowed to 1.2% in the first half of 2025, the half of the pace of 2.5% pace of 2024. Yes, economy is slowing down, but inflation is rising. You should not be decreasing your fund rates. So he's trying to make his case for another rate drop, which I don't think is warranted. Okay. So now he's saying, okay, this is where the cake comes in. Okay. So now the effects of tariff on consumer prices are now clearly visible. What does that mean? That inflation is rising because the importers and the manufacturers that are importing these goods and paying tariffs are nothing but taxes that are passing down as higher prices for the goods. So that is clearly visible on prices, and that is clearly increasing the inflation. So now he's saying, of course, one time does not mean, so he's saying it's only a passing thing. But are we seeing tariffs going lower? No. So how can he say it's only a one-time thing? And it's saying that, okay, let me read this. A reasonable base case's effect will be relatively short-lived. A one-time shift in price level. Of course, one-time shift does not mean all at once. It will continue to take time for tariffs to increase, to work their way through supply chains and distribution networks. He's again talking from both sides of his mouth. Moreover, tariff rates continue to evolve, potentially prolonging the adjustment process. On one hand, he's saying it's only a one-time thing, it's going to last a short time. But on the other hand, he's saying potentially prolonging the adjustment process, meaning it's going to go on for a very long time. The prices will keep going higher and higher and higher. But in the meantime, hey, by the way, I'm going to cut some rates. Only adding fuel to the fire. Again, makes absolutely no sense. Okay. Now then he comes out and says, a reasonable base case is that effects will be relatively short-lived. Again, I will recover that. Just repeating. All right. So now he's saying, now because of the inflation, the employees are asking, or the workers are demanding higher wages. And because employers have to now pay higher wages, they have to raise their prices. Okay, so that belief is that inflation will keep rising. So again, he's saying that, hey, inflation is going up and it's going to get a lot worse, guys. He's telling you over and over and over again that inflation is going to get from bad to worse in a very short duration of time. Okay. Now, again, he comes back and says, come what may, we will not allow one-time increase. On one hand, he's saying it's going to be prolonged. It's going to take some time, a long time to adjust. And then he says, we are not going to allow a one-time increase in the price level to become an ongoing inflation problem. In other words, if it becomes an ongoing inflation problem, a long-term inflation problem, we will raise rates. Why drop the rates to begin with? I fail to understand. Okay, it makes absolutely no sense. Right now, let's go to the next one. The stock markets are most overvalued in the history. More than dot-com bubble, more than great financial crisis, more than ever. So right now you're saying stock markets small versus large. So large caps have a bigger percentage of the stock markets versus small cap ever. US stocks on a worldwide basis, US stocks are most overvalued compared to everywhere else in the globe ever. Next slide, guys. I saw this. When I saw this, I couldn't believe my eyes, and I said, "Okay, I have to share it with my folks. I have to share it with my family, H4X family, because it is such an eye opener. It'll tell you how big a bubble we are in right now." Okay, are you guys ready? Here it goes. Now, the green is Nikkei 2225, top 205 companies in Japan. Okay, the total valuation of those capitalization or valuation is 5.3 trillion. So let that sink in. Nvidia alone is 4.2 trillion. Let that sink in, guys. Japan, the industrial hub, used to be industrial hub till about few years ago, till China took over. Still is a great industrial nation. And population not too far off from the United States. It's their entire market capitalization is 5.3 trillion, and Nvidia alone is 4.3 trillion. Think about that, guys. If that makes any sense whatsoever, any sense whatsoever, it doesn't. That's how out of whack these markets are. That's how the conditions right now that we are in make absolutely no sense whatsoever. Is 100% risk on. The margin debt is at its highest. So there is no room left for any prices to go down because everybody is fully levered up. So now, as soon as, say, there is a 10% correction, people will start getting margin calls and they will be forced to sell into markets that are going lower. And that will kind of feed on itself and it'll become like a snowball going down a mountain. So it's going to get really ugly really soon once the sell-off starts. And it's not if, it is when. Because you cannot have one company valued at 70 or 80% of the total market capitalization of a country like Japan. That's just simply insane. Either Japan is severely undervalued, which it isn't, or Nvidia is severely overvalued, which I think is. Okay, guys. Okay, now here is another chart that I thought would make you guys think again about you saying, hey, this guy is full of shit. No. Right now, 34% of the entire market cap is AI companies. Let that sink in. 34%, almost 34%. Never ever has happened that one sector has taken over more than, say, 10, 12, 13%. Here we are talking 34%. It is absolutely outrageous. It has never happened before. And it will only mean revert. And when it does, it's going to get ugly. Another thing, the last slide, I don't want to keep you guys for too long because it's Saturday. Let's keep it short, but let's keep it impactful. All right, guys. This one, my favorite. Stock valuations are at all-time high. Higher than 1929, higher than 1965, higher than .com, higher than Great Financial Crisis. All-time high when you put everything together, which is trailing PE, forward PE, CAPE ratio, price versus sales, and market caps to GDP, Q ratio, you name it. Everything put together, stock markets are at all-time high as of August 2025. If that is not a warning sign, I don't know what is. I come out with so many examples as to how things are at their absolute extreme. The rubber band is stretched like anything. It's not crazy. It's not funny. It's time to take caution. Why do I do all these things? Why do I keep coming out and warning you guys, showing you these things, that it's time to be careful. It's time to be fearful because everybody else is euphoric. Everybody else is greed. Greed has taken over in the market. When everybody is greedy, you be fearful. When everybody is fearful, that's when you need to be greedy. So hopefully I made some sense. Hopefully I clarified as to what Powell came out and said yesterday and how full of baloney he was. It really, really, he destroyed his own credibility like anything. That said, I'll wrap it up. I will be back Monday. Till then, have a great weekend. Spend lots of time with your family. Take care of yourself. I will talk to you next week. All right, guys. Thank you. Bye.